Sandeep sir, coming back to you, some positive statements that we have seen when it comes to tourism and the nuclear sector. Are you excited to buy these themes now?
See, we are quite overweight in this space. If you look at our portfolio, we could be one of the mutual fund with a very large holding in hotel stocks. Okay, at least 4 stocks we own close to 4 to 5% of the company. So that's a clear indication we like this space, both hotel and hospital. And the hospital as a space, hospital has already been recognized. I think hotel is picking up. I always describe how the real estate sector got built in last many years. Something similar is happening in the hotel space with ITC also now getting listed. The basket is pretty meaningful. So anyway, we are very constructive and government has given the desired push. So we remain equally bullish about this space from a medium to long-term perspective.
Plenty of ways of playing various themes, Sandeep. I want to try and first off understand FMCG is the one big push that this budget has got. How would you like to play this theme? Where will incomes flow first?
Be very candid, we are quite bullish on this space. We have more than 15 to 18% all exposure in this space already. And this is one sector I generally give example. Okay, this was like erstwhile admired category stocks of FMCG. And in last few months, they have hit they have reached the neglected space, or some of the stock have reached even the most hated zone also. So it's a classic inflection point what we try to identify when you look for a buying opportunity. I think the entire sector is really fit the whatever needs point of view, and obviously budget has given the desired fillip. So I think it's a sector which is not cheap in any manner. It has been always expensive space, but it will remain expensive given the growth rate which we are expecting from longer term perspective, irrespective of the challenges which we have seen in last few months or maybe few quarters. I think that is settling down. So this is a one area because a lot of under ownership still exists in this space. And if you really ask me, people actually hate this space, And so I think I am looking for all neglected and beaten down names or erstwhile admired category stock, which now in the neglected zone should be a buying opportunity. And FMCG fit the bill perfectly.
Right. And Gautam, any other theme except consumption that stood out for you or is looking good on the charts?
Well, I think do not forget that the FMCG index lost about 22% in a matter of a few months. It's never had happened in its history of the last 15 years. And I think FMCG is a mirror of the economy. Maybe there was a problem, the markets realized it, and that's probably the reason FMCG stocks came off quite a bit. Now we've seen lovely basing, and I think the turnaround looks for real, and clearly there is a lot of value and margin of safety in the entire basket. Yes, they are expensive, they will be expensive, but I think they've come to a point where the risk reward is in your favor. Another basket that we like, and we've been talking about it all along, is financial services. I think with banks, NBFCs and insurance companies, you just can't go wrong. I think in terms of valuations, in terms of charts, and if the bank nifty were to cross the level of 50,000, which is an important barrier and hurdle, I think we could see a largish 10 to 15% move on that index. So financial services, auto, FMCG would be my top 3 picks at this point of time.
Okay, Sandeep, going to come back to you very quickly. While I appreciate the need for prudence and also compliment the finance ministry for sticking to that, but the one key problem has been that capex has not come in a big fashion in this budget. Of course, compared to 5 years ago, capex, the bases are completely different, but the growth has tapered sharply. FY25, we're going to see degrowth. FY26, we're just going to revert back. Is that a disappointment for you, or do you view this differently, given that consumption was the focus in this budget?
I think, as I described in the beginning itself, it is not fair to say that capex has not grown, because if you look at the grant aspect also, which you cannot ignore, because we look at the total aspect and which has actually increased only. I said it is the capex, which was 4.1%, now become 4.3%. So that's the first point. Second important, what you have to look at, if the government is very keen to maintain the physical discipline, okay, obviously then space is very limited. You can't do both the things that you boost the consumption also by compromising on the tax aspect, and then simultaneously you continue with the massive capex. So I think some sort of popular step definitely is there's a populist budget in that sense, keeping in mind some of the elections also. But I think it is very important what was the need. I think it required, I've said in one of the channel in the morning, at the cost of fiscal deficit also, if our government has to boost the consumption, they should do it. Because a larger interest, that's the way we should play this game. I think something has happened in COVID time also. The fiscal deficit went to 9% and then 6.5%, and now we are back to 4.5% or 4.48. So I think it is the one has to adapt the environment, what is prevailing right now in the global market and Indian macro particularly, which has been deteriorated. I think it's a step in right direction. Even let's say it comes at the cost of marginal capex, I think is good.